Welcome back and join me for a closer look at what's playing itself out on the market scene is Chantal Marx from FNB Wealth and Investments. Chantal, I don't know if investors are going to be very happy about us speaking about anything else but NVIDIA this week, but we shall do it. So let's get into the kind of JSE moves that we've seen today. The JSE is trading in the green slightly, but obviously coming off red trading yesterday. Are the markets waiting for something at this point? Because even the global markets seem to be kind of confused with the kind of mixed sentiment that we are seeing.
I'm very sorry to tell you, but the world is waiting for NVIDIA results tomorrow night.
Oh, my goodness. So we'll get into that on Thursday.
So I think we're less impacted by that. I think we're looking now for clues that we could start seeing a rate cut soon in the US. What that's going to mean from a monetary policy perspective for us, we're looking towards commodity markets, what commodity markets are doing, how the outlook is shifting based on what's happening in the Chinese economy. But for the rest of the world, certainly, and particularly in the US, volumes have been so thin and options activity has been heightened before the NVIDIA release. So I don't think we're impacted too much, but that's what's going on in North America.
All right. We'll talk about China, of course. China, a very important player there in the commodity scene. We did have BHP coming out with its numbers today. As expected, softness in the financial metrics because, of course, of the kind of cycle that we are in. I did see that the share price didn't really move. So I guess really investors just cementing the fact that these results were expected.
Yes, so the reality that we're in currently is that commodity prices aren't really going up by any stretch of the imagination. Some of them are going up a little bit, some of them are deeply negative, but generally there's no go forward momentum on the revenue line because commodity prices aren't growing. And at the same time, costs keep going up in line with inflation. So what we saw from BHP today was in line with expectations, in line with consensus, and in line with guidance, and that's why the share price didn't move much.
All right. Well, I actually saw the copper price actually ticked up today. And I'm wondering if this is just a kind of expected momentum when it comes to copper because of the sentiment for what it will do for the world and also these counters, these miners that are exposed to copper. For example, BHP now saying that it wants to grow its copper portfolio.
Yes, there really is a chase for copper. The miners on the ground, I think, are actually quite desperate to get further exposure to copper because we know that copper is such an important commodity in new technologies, not only in the energy transition, but also in the AI space, as well as in the broader digitalization of the world. So copper ounces aren't really coming online fast enough in order to meet that demand. So the expectation is that the copper price should continue to increase, but it's still a metal. It's still a metal price, and it is going to be volatile, up one day, down one day. But generally, the broader trend line should be positive, and that's why we see commentary like we saw from the BHP management team. And I'm sure you'll see something similar out of most of the diversified miners as well.
Well, a broader trend line that isn't positive is Pick n Pay. We did get a trading update in the interim period. We did have sales up 4.5%. Boxer continuing to be the star performer, but Pick n Pay, they're continuing to underperform. Of course, you know, looking at the overall picture, profits still under pressure. What did you make of that report?
So I thought the sales result was pretty positive. Obviously, Boxer really strong, Pick n Pay clothing ticking along nicely. And in the core supermarkets business, there was a decline, but that decline was a lot smaller than what we've seen over the last few years. So that already tells me that the momentum could be shifting slightly. They're making some positive changes in terms of closing some loss-making corporate-owned stores as well. So we would expect a little bit of pressure because of that, but that should be positive from a margin perspective. What I found interesting, though, was that from the load shedding savings that they had, they actually decided to invest in price in order to be more competitive, and that eroded their gross margin. So I think that there's stuff to like in this result and then stuff that concerns me a little bit. But broadly, I think that Pick n Pay is on the path to recovery. Whether or not that recovery will actually end up being largely driven by core groceries, I think remains a question mark.
All right. Well, let's go into Master Drilling before we go into your stock pick, Chantal, because they released their interim report as well today. On the top line, things are looking great, up at double digits, but then you go ahead to that bottom line and there was a pressure there. Talk to me about your assessment of that, because I also do see that the share price is up almost 4%.
Yes, so this is a very conservative management team from a capital allocation perspective. So my thinking is that they became concerned that some of their equipment wasn't being utilized fully. So they've decided to take an impairment on that equipment because they are uncertain around what the utilization rate or the actual utilization of that equipment will be going forward. So it's a prudent step for them in order to make sure that their asset base isn't inflated. But from an operational perspective, if you look at profitability when excluding that, it was still a really strong result, and the cash flow metrics were incredibly impressive. What I also really liked about the result was the guidance around the pipeline, the activity that they see coming through in their areas of expertise. So that kind of builds a roadmap for what the future growth of this company could look like, and it still remains very healthy.
All right. Well, Chantal, let's get to your stock pick for today. What are you picking?
Yes, so you'll be surprised it's not Master Drilling, although I still think Master Drilling is a fantastic company. My stock pick today is Cashbuild. I think I might be a little bit early on this one, but we had a pretty terrible trading statement a week ago. But prior to that, we had a sales update that showed that revenue actually grew. And what that tells me is that momentum has shifted positively on the top line. And I think that Cashbuild will be a beneficiary from some of the cyclical support we're getting to the South African economy, low inflation, lower interest rates, as well as an improvement in confidence because of some of the structural changes we're seeing. They could even be beneficiaries of two-pot retirement savings withdrawals in the fourth quarter of the year. So I think that the momentum now is positive on the sales side, and that should filter through nicely to the bottom line in time.
All right. Well, thank you so much for your time and for your insights there on what has been moving investors' money today, Chantal. That was Chantal Marx from FNB Wealth and Investments.